Hello everyone and welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday 28th of August. There is a broad negative sentiment, nothing too significant through markets today. The FX board really just shows a slightly positive dollar, nothing really that significant though, as we've seen Treasury just continue to slip lower, really, which reflects that negative sentiment. Little bit of a better than expected US consumer confidence yesterday would helped to hold up the dollar, and yeah, it's nothing too significant. But there was a little rebound on equities, US equities last on the futures, which have helped to unwind a little bit of a drop on the S&P 500 last night. So basically cancelling out, and there's a slightly negative bias coming through European markets. The big exception to this is all through sterling really, and FTSE 100. Sterling has now fallen back. It's about 60 pips lower on the day. There's been a suggestion or a release in the US press wires that the UK government could be set to prorogue Parliament, which means to shut it down in mid-September in order to have a Queen's speech back in mid-October, and that is apparently with a line to try and help restrict the potential for a prevention of no-deal Brexit. Now, that has hit sterling this morning, back 70 pips now. 122 figure is a level I'd be watching out for. I'll talk about the technical implications of that in a bit, but certainly that has helped to see FTSE 100 perform better. You see that negative correlation play coming through once again, and it'll certainly be something that I think plays out in the coming days as to exactly how this pans out. But there's a bit of a consolidation on the dollar today, mild tick higher as commodity currencies remain under pressure. The Kiwi is another underperformer, as is the US, as is the Aussie dollar, as is the Canadian dollar. Slight element of consolidation to euro and the yen as well. But the gold price broke back above 1534, which was a multi-year high dating back to April 2013, that failed to close above that level on Monday, but yesterday closed above that. So we continue to see the gold price forming strength. A little bit of a consolidation today, but nothing decisive there in terms of a corrective move. The oil price adds into this element of dollar strength, really, with the US crude, which has on the WTI performed better. Strong run high yesterday on the API inventories. Now that sort of focuses the mind on the EIA inventories today. API inventories drawdown was much bigger than expected, around 11 million barrels of drawdown, expecting a 2 million barrel drawdown on the crude stocks on the EIA, so expect that to be beaten to the downside today, and that would be oil price supportive if that were to be the case. We've seen the oil price, which has ticked higher yesterday and a little bit higher today, but generally speaking you can see that there is still this run of lower highs and lower lows on oil. So that takes me to my chart of the day, which is Aussie yen, and I've talked about how the fact that we've still got this negative sentiment coming through, that is reflective on Aussie yen. We've got this downtrend over the past few weeks. Actually, if you move out, you can see that obviously Aussie yen has been under pressure for weeks now, having broken below the 73.07, which was a massive old key floor. That became a basis of resistance in the last couple of weeks. Market consolidating, but then fell away at the beginning of this week. Little rally into this downtrend again, but that I think is a selling opportunity. You can see that reflected through the negative configuration on the momentum indicators. MACD lines struggling in any recovery. You've got the RSI falling over around 40 again at that downtrend. Yesterday the move came back lower to leave resistance at 72.06 underneath 72.40, and obviously that reaction high at 72.90 underneath 73.07, which is that old floor. So it certainly looks as though the market is going to be gaining selling pressure once more for a retest of that 70 big figure area, 69.97, and you can see that that is basically a really a level that the market continues to come out to levels not seen since well, 2009, so 10-year highs on, 10-year lows on that Aussie yen, which really has opened the floodgates, and it certainly looks as though further weakness is likely in due course. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our trading webinars. Thank you.